All right, Jordan, let's jump ahead to kind of the lead up to a letter of intent, or the LOI stage, as we call it. Can you kind of set the tone here for us, please?
Yeah. So I think this is kind of the bookend, right? Of we've started with, hey, there's been one phone call, right? And we're going to agree to share some very basic info about the business with one another. So now we're sort of at a place where, okay, we like what we see. We each like what we see. We've set this expectation around price weeks ago. If we're actually going to do a deal, pursue a transaction, and all that, what does that really look like? And at this point, this is on us as the buyer to really put this all together. So this is where the letter of intent, or LOI, comes into play. You and I have slightly different views from a dating analogy standpoint, how to think about this. I think about it as this is sort of the proposal, which means that there is still time where you will be engaged and before you get married, which I think is critical. You have described it, if I remember correctly, as being asked to the dance. I'll at least defend my choice here, is that I think you are showing some serious commitment to pursuing and getting the deal done with terms that you'll agree to in the letter of intent, still knowing that there is work to be done and more diligence. I'll talk about that in a second. Mm-hmm. I don't know if you have a different perspective, given you think this is more of a asking to the dance than asking for the engagement.
I appreciate that. And I would not want to underemphasize the importance of this stage. The notion and the basis for that sort of, I guess, the description, right, of this phase is really that a lot of the document, 90% of it, is non-binding. Mm-hmm. And it's really a framework for the next phase, because the purchase agreement, which is the final thing, and we probably won't talk about that today, that gets drawn up by the lawyers, is obviously where everything is sort of set in stone. We are seeking to be pointed in the right direction together. And so it does not mean that things are finally set in stone. But I will say that by and large, when I have been in an LOI negotiation with someone, it has been a very serious event for someone. And the expectation that these are the terms that you're going to land on it's reasonable to want to guide towards that. To assume necessarily that this is exactly where you're going to land I would say that maybe somebody who is in the position to sell their business is maybe they're setting expectations very high for what's in there. It is a framework, and we're going to work towards it. So I don't want to, it's a serious document, and it's not to say that we shouldn't take it lightly.
No, for sure. And I think that's one thing that when we talked earlier about, hey, all the information we're trying to understand, gather, process, I think to really prepare the LOI, and I'll talk in a second about what goes in there. I think many business owners who have talked to an interested buyer have probably seen something like this. But there's a lot of stuff that we didn't talk about that happens at this point, right? There's no accountants involved. There's no lawyers involved. There's no sort of outside diligence providers, as we call them, who are going to say, hey, we need all of your contracts, and we're going to need all the financial data to really, see everything, basically say, to confirm everything that you say it is what it is, which is what lawyers and accountants are really good for, beyond other things. That's where, after the LOI is signed, that's when I say there's more work to be done. Like, there's more diligence on that end that is certainly need to be done. But I think having, again, sort of this other, we've set price expectations early with an IOI. This is really setting deal expectations and having a lot more precision on it before we kind of get to even committing more of our time to it. I want to come back to what you said about the document and exclusivity and non-bindingness. Non-bindingness is not a scientific term. I've now made it up. Is everything that's in there, almost everything is non-binding, in that if there are elements that we find on both sides as we're going through diligence that impact how you think about valuation or structure or certain provisions, it's all up for conversation. Ideally, as you said, it's like this is in sort of a document that lays out in very good faith what the ultimate deal will look like. Mm-hmm. The one thing not the one thing. There are other things, but the one thing that's really critical that is binding is what we call a period of exclusivity, which is a fancy way of getting to typically for 90 days. I've seen shorter or not really seen a ton longer, let's say 90 days. The the buyers and the sellers are going to say, okay, we are going to only work with one another and no other parties on getting this transaction done. And I'd be curious for your thoughts on this, but at least my take about why this is important is it's not meant to be an onerous provision. It's really about time allocation. Because as I mentioned, we're now bringing in a lot of other folks into this process to get it done right. We're going to be spending a whole bunch of money. Owners have to spend a bunch of money on their side with diligence. We're bringing in the banks. There's investors who are going to be more seriously involved at this point. We're drafting up documents. And this is the only thing we will be doing for the next 90 days or 24/7. So we want to show that there's some real kind of commitment on both sides to that process versus, trying to really shop it around and work with others. So in exchange for us putting a lot of our time in, we ask the same in return from the owner. And I think, they hopefully I don't know if hopefully, but I think an owner would also appreciate that we're committing to the same thing as well. So that's why that's in there. Again, I'm curious if you have other things to add there about exclusivity, but it's a question we often get why it's included.
Why it's there. I echo every part of that. And really the crux of it is you're willing to invest as much energy as we are into it. Mm-hmm. We are ready to acknowledge that you will be seeking some professional advice on this stage. And we hope that you will recognize that we will spend a significant amount of time, energy, money, and opportunity cost to get it done. Mm-hmm. Having gone through the process, and unfortunately not coming to the conclusion, I have learned that it's very hard to do a good job of running this process in concurrency with another process. If I'm signing an LOI, it's because I'm very, very focused on you. And second to that, I think to give somebody an idea of the magnitude of the dollars that'll be spent, the businesses that we typically look at, it could be anywhere from $150,000 to $300,000 that will be invested simply to determine whether this is the right opportunity and validate the data that's been shared early on and confirm with a third party look at this because we're not necessarily accounting experts. For example, that this makes a lot of sense and that what you have represented in the business in the early phases is truly what it is. And it can be a process where we want to learn and ask a lot of tough questions, but just know that this is we want to do good business with people that want to do good business with us, and it is very much a partnership. And I can't emphasize that enough. Selling your business is very emotional, and some of the things that I've seen that I think get things to the finish line are that acknowledgement that there are things to focus on and there are others, and I'm getting away from the point, but there are some things to focus on and there are other things that are less important, but we need to be able to look each other in the eye, shake hands, and move forward because we're both on the same page.
Yeah. Yeah. I mean, that's, I think why when folks talk about, hey, I'm under LOI, which I want to talk a little bit about actually what this document looks like, because I realized now that when you were speaking, like we talked a little bit about what an IOI actually physically looks like. We haven't talked about this.
Good point.
Why there's some weight put against that, because there is the period where we're both saying, that's why I think of it as the engagement. Some engagements don't always make it to the altar, which, fortunately or unfortunately, but So specifically with the LOI, I want to talk quickly about kind of what it looks like, what's included. So one, it's provided by us as the buyer to you as the seller or the owner of the business, the person we are purchasing or acquiring the business from. You already said, most of this is non-binding, but it's going to provide you a level of precision about what the deal or transaction will look like. So this is where I'd like to have a little bit of a discussion with you, because I think as we've talked, there are a couple schools of thought about the level of information folks include in an LOI. So I will say at a bare minimum, what it will include is the total valuation of the business. It will not be a range, it will be a number, right? And we're talking about typically for the businesses we look at, millions of dollars, typically double-digit millions of dollars. It depends on a lot of factors. So again, as if you are watching this, do not hold me to a specific number or valuation that I put down in LOI, but it will have a valuation of your business as one number. Should also include how that's then translated into what I call the purchase price, because the valuation of the business is not going to necessarily be almost always the amount of cash that is paid out to an owner at the close of the transaction. The reason being is, if we go back to in this second phase before the LOI of really discussing, hey, as an owner, what do you want to do if you sold the business? Do you want to remain involved? Do you want to leave? All that factors into then how the structure of the deal is made around, are folks retaining equity in the business, right? So they're actually selling not all of the business, but most of the business. Has the seller agreed to finance some of the transaction? Very common for basically us to borrow money from you at a very attractive interest rate. There's a lot of tax benefits to that. Another discussion for another day.
We touch on some of that in the episode with Ryan, actually. So with Ryan Crago, I'll provide a link so you can go back to it and think a little bit through the structuring stuff.
Yep. So there's all the structure piece that has already been covered. There's that. There might be earnouts. There's one other one which I'm forgetting, but all of those pieces ultimately are taking that total valuation that I talked about and just creating and breaking it out in different ways. What I can say is, for the most part, most deals, the majority of it will be a cash payment at close to a business owner. But it just set expectations up front. It's very seldom that the entire deal is going to be all cash at close. There might also be a bit of a provision in there for what we will call indemnification claims, which is basically say, we're going to go through a whole process with our lawyers together to say, hey, here's what you represent about the business before we close. Let's say 6 months later we're closed and there's a whole bunch of fraud that you didn't tell us about. I don't hope this happens. No. That's a mechanism financially for us to be able to, make ourselves whole on that claim. But anyway, there's a valuation piece, and then how is that broken up? I think about it as sort of how the purchase price and then the structure is developed. Those two things are almost always in everything. They'll talk a bit about working capital provisions. I'm probably not going to get too far into that, but that's an important piece here. It will lay out kind of what the remaining diligence process will look like and some general expectations on timing. It may lay out the transition plan, right, as you as the owner, what you're looking to do afterwards. I think that I typically sort of hedge my bets a little bit and keep the language fairly broad, but to say, hey, we've discussed this, here's what we know, but we're not agreed to anything quite yet.
Yep.
And then there might be some more language in there about the actual structure of the transaction as relates to stock versus asset sales. It really depends on how you've structured your own business. There's different tax implications there. I think my goal, and Kirk, I'm curious if you agree with this, is you want it to be as tax efficient as possible for everyone. I don't think we're in sort of the game here of like, how are we going to make money on the margins with like structuring the deal from an asset versus stock sale? I just don't think that's productive. But that may or may not be included either as a, hey, here's how we're going to do it, or we're going to determine it down the line. So let me pause. Do you have anything that you've typically seen, or do you have any thoughts about things that you'd actually strip out from what I've included?
I wouldn't strip anything out. I think that there's some additions I'd add. So around the tax side of things, I'm not a tax expert and will never pretend to be. If you have really fixed ideas, if you're a business owner, you have really fixed ideas on on the structure you want to have, I think that's helpful. However, it can be a hindrance to the process, because there are lots of ways to have a treatment that doesn't make it such a binary outcome. There are some folks who think that I should only ever have a stock deal, and that's the only way to do this transaction. If you feel that way, somebody can put the effort in on the front end to make sure that you're on the same page given those assumptions, but it doesn't always necessarily assume that that's the right way to go that optimizes your tax situation. There are so many other variables and levers that we need to account for. So I leave that to the professionals, and it is part of that next process. I would also just highlight, you mentioned working capital. it is probably the number one hangup in a sales process. It is almost always misunderstood. It is always tough to kind of wrap your head around it. And that's from the buyer side as well as the seller side. One of the things that we didn't talk about earlier is sort of looking at a trailing 12-month balance sheet and a trailing 12-month P&L, which is a data point that I use to try and get a sense of what working capital is like inside your business. But I will never set working capital and how we are going to think about it at the LOI stage. And other folks might, and you may insist on it. I've had folks insist on it. However, it created, unfortunately, right, some challenges in the process because there was a gap between sort of how they think about working capital and they understand it and the reality. And what I'll leave folks with here is businesses have innate working capital needs. They are inherent to the business, and they will persist beyond our time that we acquired the business, and how much the needs of the business may change with seasons, et cetera, but it's part of the offer generally, right? And it's part of the business. It is no different than the trucks that you roll down the road or the people inside. And so they're inextricably linked, and to try and set working capital without working through a proper process there, you might be shooting yourself in the foot. So it typically will not be in an LOI phase, and it will get pushed down the road because there's not enough accounting data at that point to ever make a determination that's going to accurately describe what it is.
Yeah, just to put a bit of a finer point, I think what I would say is introducing that working capital is an important component of ultimately the deal is something I introduce in LOIs, and will describe generally what it is we are trying to do in terms of determining sort of a target level of working capital, and then why that's important for after we close the deal, if there are major differences between the target we set and what it actually is in the future, what the mechanisms are. I'm with you. I think trying to wrangle down a number on limited info is usually not super productive. It can be a conversation. The analogy, and I agree, it is confusing. It is sometimes hard to describe. What I've tried to do, and then won't go too far into it, is say, imagine we're buying a store and you've got a whole bunch of stuff on the shelves and in the back room. If we're buying your store, we want to buy all that stuff, but there's sort of value assigned to each of those things, which is kind of encapsulated in working capital. Like, why would we want to walk into that after the sale or after the purchasing the business and have everything be bare? We couldn't literally not run the company in the way that we thought we were purchasing it. It's a very simplistic way of describing it, but I've used that mentally to try to have a conversation about what it is. I'm sure it'll be another topic for another one of your video series, so let's not get into it. There's two things I want to add here, and then I can probably shut up about LOIs. Is one, as you said, this is sort of a critical moment in the sort of discussion between buyers and sellers. So we realize that this is going to be, the term that gets thrown around all the time is a negotiation. I think of it more as like, this is just going to be an ongoing discussion because there's going to be a lot of questions, and I get that. There might be pushback on certain provisions, and that ultimately means that this process can take weeks, right, to really hash it out, assuming that the LOI is really kind of moving in the right direction. But this is it's a bit of a living and breathing document. I think as buyers, we will defend what we've put down on paper and try to really back up our assumptions. And if we didn't have strong conviction around the information we put in front of you, we wouldn't put it together. So please, I think, understand that. But you as the seller have every right to ask any question on any word, on anything in that document, because we ought to be able to describe it to you. So I think that's one. This is where I think of it as, there's an adage I've heard of, in any sort of in a sales process, 80% of the motion comes in the last 20% of the deal. And I think that goes along here. And that's not a bad thing. It's just a thing. So there is going to be a lot of inertia. And the second is, the outcome for this is either the document gets signed or it doesn't get signed. If it does not get signed, there's no exclusivity, there's nothing there. It's it's a little bit of a busted document, or you keep trying to negotiate it. Yeah. But if the document is signed, that's when the exclusivity period kicks in. So if you've talked to folks as owners, who said, hey, I'm under LOI or I have a signed LOI, that's what they mean, that they've signed that document with the binding provision really being the exclusivity piece, and the rest of it, this sort of agreement around this is the deal we are pursuing, and ultimately we're going to get within the next 90 days to closing it.
That's it. Two things I would add that I think can be important components to an LOI as well are how you're going to finance the deal, because it's an input to how we're going to get to the end point and the partners that you're going to rely on to get there. That can be a component of it, and it's more indicative than anything, but it's an important data point for most folks, largely because there's usually a prudent amount of debt that's being used, and the stakeholders who are involved there are starting to get pulled into this process very deeply and meaningfully. So that's something to see there. Some things that I've also added at an LOI stage are, reassurance that the key employees are going to get employment letters. We are financial buyers who are operationally motivated, right? We are not strategic buyers, and there is no outcome in our world where we come in and strip headcount or do blunt cost cutting. Our motivation is to continue growing the business. And that's evidenced by just Jordan being a growth oriented guy prior to this, and myself as well. And so ultimately keep that in mind, right? Like, it's not unreasonable to discuss who sticks around and what sort of reassurances can we provide them, because I'm more than happy to provide those reassurances because ultimately it benefits me. And I think the goal is that it benefits the business. Did we talk a little bit about sort of the timing and how much you did mention sort of the amount of time that it takes to get an LOI done, right?
Mm-hmm. Yeah, briefly, but just to recap, because I know in the other sort of phases I mentioned, right? So this one, I mean, I've heard some LOIs get signed in light record time. I'm talking about days. I think that if that happens, they've probably been heavily negotiated before anything got put on paper. I would say this is a multi-week endeavor. It could be a couple months. I mean, it really depends on how specific you as a seller want the LOI to be. And the more specificity that's needed, might have to provide more access to more information for us, so we can provide you with, the right language in there. But I think several weeks, maybe a month, is not unreasonable. So this can take a while, but it's a distillation of a lot of other work. And again, this, it is bringing together what we think is ultimately going to happen if we close the deal and have a purchase agreement signed. So yeah, maybe just to step back then, we've talked about those three phases. Again, we've assumed, hey, you as an owner have talked to an interested buyer, sign an NDA, you're willing to trade info, right? You're getting from the three phases being, let's have some general agreement on price around an IOI, an indication of interest. We'll say that could be a week. Then you're in the bit of the, hey, we're going to be seriously dating one another, getting to know one another sort of better about the business personally. Let's call that 3 to 4 weeks. So now we're up to 4 to 5 weeks total. And then, hey, I'm serious about this. Like, I would like to propose to you or ask you to dance, or whatever the right analogy is. Let's call that a month. So, you add all those up, we're talking about a couple months that this whole process could take. If it moves more efficiently, that's not a bad thing. I think actually that could be a really good indication of the momentum, the fact that information is being traded between one another much more quickly. And if it takes a really long time for whatever reason, that could also work too. I mean, you and I both know deals that took a long time to get closed, and they were ultimately the right deals to do. So those are, again, some benchmarks, but a plus or minus, not something to be worried about.
Absolutely. I unfortunately, I've been part of a process, an LOI negotiation that dragged on a long time. And I was very interested in seeing it be successful, but I will say in hindsight that it took too long, and that you, as a business owner, you want to be really mindful of the patience of the individual that you're working with across the table. I'm a supremely patient person, and I'm grateful that I am, but I also know that given the fact that it actually eventually failed, it was an indication of other things. And so just be mindful that it is a bit of a dance, and it does come down to people's time. as an input to that, I would love to talk about sort of my advice to business owners when it comes to them seeking advice on this phase. I would highly advise against using the local lawyer that did your prenup or your estate and trust guy to be your advisor on the sale of your business. Buying and selling a company is a highly unique process, and generally those folks are not necessarily qualified to be able to give you sound advice. And this is, in some cases, I am negotiating against myself here. And a lot of buyers would be happy to see you get the wrong advice. But I'm going to say it right now, make sure you have somebody who has mergers and acquisitions experience of businesses of your size that understand the nuance and the process and can serve as a third party. Because I'm happy as a buyer, if somebody's new to the process, to share my thoughts and educate. But I also am very mindful of the fact that I'm biased in the process and that you're going to take everything I say with a grain of salt. And so find somebody you can trust who's got experience, lean on them. It may cost you a little bit more money, but you're also talking about running a smooth process that can help get you to the finish line. And that's what we want to optimize for. And I will say that as part of this timeline conversation, somebody who can turn things around thoughtfully on a timeline that makes sense for quick edits, right? It should take a short amount of time to bang it out. And so time kills deals. With the right advisors, they're going to turn around in time and make sure that you're keeping that momentum going. So I'll leave it at that.
I will say I echo what you say about having the right advisors involved. It's, surround yourself with the right people and give you the right advice. It's not to say that, you don't have trusted advisors already, but I've had the same experience where, there's been very standard provisions in LOIs that I've included. And when I say standard, I mean any buyer would have included, and getting a lot of pushback on that. And it was difficult for me to try to describe why I thought that wasn't needed and important. And, maybe if the right other sort of third party was there as a little bit of a sounding board, it could have helped with that discussion. Again, I can understand and appreciate the feedback I got, but I think it's just to be able to, provide, again, a little bit of the lay of the land. One last thing I'll add is there's some differing philosophies on kind of what the LOI represents from a buyer standpoint. I think I'll speak for me. I'm thinking I'm speaking for you, but I won't assume. LOIs to me is a serious thing I'll put in front of someone. And I always tell folks, I'm not in the business of putting LOIs down in front of people that if they got signed, I don't think will close. And what I mean by that is I'm putting a valuation down that I'm very confident is the one we'll close on. This has the support of the folks who will be helping to finance this deal from an investor standpoint. And essentially, barring any surprises and diligence, that this is on a path to getting done. I think for folks in our position, that's important. It builds a lot of trust, and also it's a test of our conviction. There are other buyers who will put LOIs in front of folks very early with very limited data with very big numbers. And what I've heard and experienced is that that's really a strategy to just get folks locked in, block out other buyers. But the intent is that number is never going to be the one that gets closed on because they don't know enough about the business, right? It's to say, hey, if it's here, we know we're coming down to here. Just they won't tell you that. They know themselves. And look, if that interests you and you think you like that partner, then pursue that. But I think that it's always been really important for me to be really mindful about who I put LOIs in front of and how I think about structuring them versus just doing it, shooting from the hip and, throwing out a big number just to get someone excited and knowing that it's all going to change later. So that would be my parting thought on that.
I love it. That was an early piece of advice I got from somebody who's been doing this for a long time. And it comes down to integrity being number one and lead with that. So perfect. Jordan, I love to kind of cap these conversations off with what I'm calling the lightning round. I would love to hear two things from you that you would recommend to any business owner to help them increase the saleability of their business?
Yeah, it's a good question. So one I'll say is be prepared to talk to any buyer about what I'll call the predictability of your revenue or sales. You'll hear this a lot of buyers saying, hey, we're really focused on recurring revenue businesses. And sort of the standard that's been is contractual revenue, right? Hey, I've got customers who sign 3 to 5 year agreements that pay all the time, they never leave. We know, having gone through this, having searched and talked to many business owners, that not everyone is structured that way. But there's a lot of revenue that is very predictable, customers that are very loyal, and that is valued very highly by folks on our side of the table because it gives us a lot of comfort and confidence that we're stepping into a business where you'll sort of have that base of revenue and sales when you start, but you can also, when you grow, sort of expect the same dynamic as well. So I would just encourage owners to think about that a little bit and say, hey, maybe if you're not structured purely contractually, just how, kind of how's that revenue built out, for lack of a better word, how long your customer has been with you, how do they think about rebuying from you or renewing with you? Just that general narrative around predictability, I think, will go a long way, and maybe dispelling some of the myths that buyers have, rather. You said 2, right? So I gave you 1. I'm going to cop out a little bit here and say that I would also, and this may not be exactly about saleability, but be prepared to really answer the question, why are you trying to sell now? Again, we as buyers are looking to buy now, or as sort of soon as possible, as long as the fit is right, as I like to tell people. And I think having a narrative or just kind of your elevator pitch about why now is the right time to sell for you, that can be highly personal, right? Actually, highly personal stories can resonate very strongly. Of maybe you're looking to retire, maybe something's happened in your life that you just need to have a change of plans. I think being able to communicate that clearly will go a long way and demonstrate to buyers if you are serious about it. And as we talked about earlier, if you're not, that's fine, right? Maybe you're not, and you just have a narrative around that too. Yeah. So the 2 things I'd say is predictability of revenue, understanding that and sort of describing that, and then thinking a little bit about why you want to sell now and having that be a very sort of tight, concise story.
Absolutely. And saleability, I think should be, I want to clarify, I think sometimes I don't like the business to be over marketed. There are some folks who have a tendency to sell. And I think a lot of this, meaning the business is great for this reason, and there's all this that we can do, and it's too salesy. Let's have a candid conversation about where the business is and why you're leaving or choosing to, why now. And it goes a long way to building trust. And it's because it'll take all of that to get us through the next phases of the process. And that candor and humility and transparency is super important. Jordan, this is fantastic. I really appreciate you spending some time with us today. Can you share, how somebody's going to get in touch with you if they heard some great things and would love to sell their company to you?
Sure. Well, connect with me on LinkedIn. I guess this will probably be up there. So feel free to do that with in the notes section. Just, you can tell me how you found me. You can reach me at Jordan, Jordan, at Ravine Cap, RavineCap.com. Those are probably the 2 easiest ways to reach out if you're interested. I'm always open for a conversation, and we can book out some time and get to know each other a little bit more.
Superb. All right. Well, hopefully I'm going to see you soon, not just online. Again, I really do appreciate your time and effort here, and thank you for sharing all your knowledge. Hopefully this is helpful, and we'll catch soon.
Yeah. Thanks, Kirk. Thanks for putting this together.
You're welcome, buddy. Thank you.
All right. See ya.
Cheers.